Welcome back to the channel, folks. This is Jason, certified financial planner and host of Fighting Words Financial. Today, I wanted to make a quick video talking about the points that were brought up today in a report by Citron Research. Now, let's keep in mind that Citron Research is a short-selling firm and they stand to make money if the price declines in the short term. But let's take a look at their report. And before we get started, I do want to tell you that it's actually possible to agree with every single point that they have in this report and still think that they're wrong about the direction of the company, and I'll talk about why that is. All right, so Citron Research, basically after 2 years of being long on this firm, they're saying now's the time to get out, now's the time to invest in some other disruptive technology. So right off the bat, they say 2 years ago when NIO was trading at $7 a share, they made a controversial recommendation to buy this company. Number one, you can disagree with that right away. Buying an automaker at $7 is not controversial. It's a speculative risk. It's always going to be a speculative risk. And I think that most people buying that understood that. But they do address what can only be described as a recent mania of investors flocking to electric car makers in China that don't show any deeper understanding of a market that is going to be marked by price cuts in the future. I think this is entirely true. Most people are buying NIO stock or buying XPeng stock, not realizing that we're getting really filtered information here. We don't really know what's going on there. We don't have the same level of transparency with Chinese companies that we do in the United States, and we see fraud here in the U.S. too. I mean, look at Nikola, allegedly, a fraud, allegedly. But anyway, this is not a Hindenburg Research report either, by the way. Citron is not alleging fraud by any means. What they're saying is that competition is coming, and it's mostly going to be competition from the Chinese Model Y. They think that the price of the Chinese Model Y is coming down, and that it's going to compete directly with NIO's ES6 and EC6 vehicles. Now, I think this is true, and I'm going to go over why none of it really matters in the end, and it has to do with the giant addressable market or unaddressed market that China is going to have by the year 2025. But right now, this company, Citron, sees that there is a risk that Tesla could cut the price of its locally made Model Y from roughly $73,000 down into the $56,000 to $58,000 range. And this does present somewhat of a problem for NIO. Now, if you watch any of my other videos when I talk about the manufacturing process and Wright's Law and how you benefit from increased margins when you get better at manufacturing something, this is kind of the issue with NIO, is that Tesla owns their own factory. They have a half a million unit production capacity there. Every time they make improvements in manufacturing, they get to keep the margin increases in that. NIO doesn't do that. They have a partnership production agreement with JAC, which is a state-owned enterprise. A state-owned enterprise that, of course, is going to be laden with all of that institutional inertia. It's probably going to be very hard to make changes. And even when they do make changes and they make improvements in margin by improved manufacturing techniques, NIO does not benefit from that. JAC benefits from that. If NIO wants to benefit from that, they're probably going to have to renegotiate their partnership production agreement. I'm not saying they can't do that, but that adds in an extra layer of complication there. There's an extra hand in the cookie jar that Tesla doesn't necessarily have. But I think the really big point that Citron Research is missing here, and I suspect they're actually doing this deliberately, they know what's going on in the Chinese electric vehicle market, is that China has this big push to make sure that 25% of all vehicle sales in China by the year 2025 are actually these new energy vehicles, meaning they're either hybrid vehicles, battery electric vehicles, or fuel cell vehicles. That's a huge push. And they're making it very easy for people to choose an electric vehicle over a gasoline-powered vehicle, and we'll go over that in just a minute. But let's talk about the size of the Chinese market in total. Right now, there are about 30 million vehicles a year sold in China. That's an enormous amount of vehicles that are sold in China. If you're looking at 25% of these vehicles being new energy vehicles by 2025, that's literally 7.5 million vehicles that need to be either battery electric, hybrid, or fuel cell vehicles. This is an enormous market. Gigafactory China's 500,000 unit capacity is not going to be enough to meet that demand. NIO's 300,000 or so unit capacity, XPeng's 300,000 or so unit capacity is not going to be enough to meet that total demand for new electric vehicles. Now, I don't like making huge, bold predictions. And if you notice, I don't make any price target estimates in any of my videos because I know that the history of stock pundits is a history of most people being wrong about most things most of the time, and probably myself included if I were going to make all of these price predictions. I don't. I talk about overall portfolio composition. I talk about risks involved, and I talk mainly about whether or not I think a company is a really good long-term bet. I still think NIO is a very good long-term bet, even though I've trimmed my position in it and repositioned those funds to other electric vehicles. But this report doesn't do anything to dim my expectations about the long-term prospects of NIO. And I don't think that Citron actually really believes this either. They're trying to make a short-term profit on this by pointing out the fact that most investors know that the prices outrun the fundamentals at this point. What everyone is looking at is 2025 and this massive market that is expanding. Now, when I'm saying I'm going to make my bold prediction here, what I'm saying is that the competition between Tesla and NIO doesn't matter because neither one of them, both of them combined, aren't going to be able to meet the demand. I think that 5 years from now, by 2025, it's not going to be just NIO and Tesla and XPeng and Li and all these other companies that we know about that are competing in this space. There's already 130 different car brands in China. I think that all of them, and there's going to be a bunch of new car brands. I think there could be up to 200 car brands producing electric vehicles and close to 1,000 different models of electric vehicles available by 2025 in China. That's how large this market is. There's a potential for 7.5 million electric vehicles to be sold by 2025. China is making it very easy for people to make this decision, and let's talk about why that is. One of the things that doesn't get talked about very much in videos on Chinese electric vehicles is actually how much it costs to get a license plate for a regular gasoline vehicle in China. Many cities suffer from serious vehicle congestion in China, and they have quotas on how many license plates they can issue for new gasoline vehicles. A lot of cities choose to put these license plates up for auction. And as you can imagine, the price of those license plates gets bid up. Now, when I initially heard that it can cost you $12,000 to get a license plate, I did not believe that. I had to talk to 2 or 3 people that I know that live in China to verify that this is true. And one of them told me that he actually went to an auction, for a couple of auctions, for 2 years trying to get a license plate and was not able to secure one for a gasoline vehicle and ended up buying an electric vehicle instead because there are no quotas for license plates on these electric vehicles. And he said that the registration fee, instead of being $12,000 for that license plate, was closer to $100. So between the subsidy you get for buying a vehicle that's under $40,000 and the fact that you save $12,000 on a license plate, it's actually getting really easy to make that decision to buy an electric vehicle. This is why they will meet that goal of 25% of all vehicles being sold in China being new energy vehicles. They're going to be electric vehicles, they're going to be fuel cell vehicles, or they're going to be hybrid vehicles. It is all about this sort of economic motivation. I think that Citron understands this. I think that they're very crassly and very cynically trying to make money in the short term by shorting a stock that they know has outrun its fundamentals a little bit. They're going to take advantage of a little bit of the irrational exuberance turning into fear at this point. I would pretty much ignore this. If you're a long-term investor and you're looking at 5-10 years in the future, I would absolutely ignore this report, guys. Anyway, this is just my opinion. You can tell me how wrong you think I am in the comments below. This is not a recommendation to buy, sell, or hold any security, and it's not aimed at any individual. Thank you very much, and have a nice day.